Imagine you have $10,000 sitting in a savings account. You think your money is safe, but that's not really the case. Let's say inflation is 3% per year, which is fairly average. After 1 year, your $10,000 can only buy what $9,700 could buy today. After 5 years, it's down to around $8,600 in purchasing power. And in 10 years, your $10,000 might only be worth $7,400 in today's terms. Think about that for a moment. You didn't touch the money, it's still $10,000 in your account. But because of inflation, what you can do with it has been drastically reduced. You're essentially losing money by doing nothing. Now, consider this. Most savings accounts offer interest rates below 1%. Even if you're lucky and earning 0.5% interest, you're still losing ground because inflation is taking away far more than the bank is giving you. Leaving your money in a savings account feels safe, but in reality, it's the riskiest move of all. So, how do you fight back? The answer is investing. Why? Because it allows you to take advantage of compound interest. Albert Einstein called compound interest the eighth wonder of the world, and for good reason. It helps your money grow on top of itself, turning even small investments into massive wealth over time. Let me show you exactly how it works. Imagine you save $500 every month. That's $6,000 a year. If you did this consistently for 20 years, you'd have $120,000 saved. Not bad, right? But here's the catch. That money doesn't grow. It just sits there. And while it's sitting, inflation is eating away at its value. Now, let's compare that to investing the same $500 a month. Say you invested in something simple like a low-cost index fund, which historically has earned an average return of about 7% per year. Here's what happens. Every year, your money grows. Not just from what you put in, but also from the returns you earn on your investments. At the end of 20 years, instead of $120,000, you'd have over $250,000. That's more than double the amount you saved. And this growth happens because of a compound interest, which helps your money grow on top of itself. Here's how it works. When you invest, your money earns returns. But instead of withdrawing those returns, you leave them invested. So the next year, you're not just earning returns on your original investment, you're earning returns on your returns. This is why investing grows your wealth exponentially over time, while saving only gives you what you put in. Here's the question you need to ask yourself. Would you rather see your money double over time or just sit there losing value to inflation? Now, let's see how you can start investing. Before you invest in any assets, you should have a solid emergency fund. A good rule of thumb is to save 3 to 6 months worth of living expenses to cover unexpected costs. Once your safety net is in place, you can start investing. You should start small and invest in things you know. As you gain confidence and experience, you can start exploring other options. Here are a few ideas. Invest in a low-cost index fund. These track the overall success of a particular market or index, like the S&P 500 or Dow Jones Industrial Average. They do this by offering small pieces of most or all of the stocks in an index pulled together. Index funds make diversification much easier for the average investor, and the passive management style allows the manager to charge lower investment advisory fees. Want to invest more and grow your wealth even faster? Here's the secret: increase your income. And one of the easiest ways to do that is by starting a side hustle. Ask yourself, what skills do you have? What do you enjoy doing? Chances are someone is willing to pay for it. Freelance platforms like Upwork and Fiverr let you sell your skills worldwide. Whether it's writing, design, coding, or even voiceover work, the internet has endless opportunities to make extra money. These are just a few ideas, but the possibilities are endless. Keep in mind that the key is to move your money from sitting idle to actively growing. You don't need to be an expert to start. What you need is consistency and patience. Even small amounts invested consistently can grow significantly over time. If you enjoyed this video, please like and subscribe. That's the best way to help me keep making more content like this.